Welcome everyone to today's webinar. Today we're going to talk about government contracting, accounting, policies, and procedures. We have Robert Jones with us today with Left Brain Professionals, and we're really glad to welcome Robert back to talk about this topic. My name is Liz Brigson. I'm happy to be your host. And the phones are already ringing. That's what I always like to say when we hear a phone ringing in the background. We are going to, like I said, talk about government contracts, policies, and procedures. We love making these webinars interactive as much as possible. And we do have Jenny from the Left Brain Professionals team with us, who's going to help me monitor the Q&A box. So if you want to head out to that questions pane as part of your GoToWebinar control panel, go ahead and find that. You probably, some of you, yes. Welcome, Dave. He's already said I'm joining from Tacoma. Audio is good. So if anyone else wants to say hello, let us know where you're joining from. We would love to hear from you. Also, you can download the handouts. The handouts are available from the GoToWebinar control panel. They're also available from your Incorsa dashboard. So you can go ahead and grab those from either place. Lots of great reference material that I know you'll want to hang on to for the future. Today's webinar is an hour and a half, so we will have 7 poll questions to earn CPE credit. You'll want to respond to at least 6. But we'd really love it for you to engage and participate in all 7 of those poll questions. We do have a bonus one at the end. We'll mention that when we get there. Also, your CPE certificate will be available for you to download from your Incorsa dashboard an hour after the conclusion of the event. As always, if you have any questions, you can email us at support@incorsa.com. Well, hopefully you had a chance to join us before. If you are new, then I would love to just briefly reintroduce Robert Jones. Robert is a government contracts and accounting expert. He's built a firm to specifically serve those who handle government contracts and the CPA firms who advise clients who handle government contracts. He has an excellent background in accounting, business management, compliance, operations. He's been a controller, a defense contracts manager. He also is an instructor, a speaker, and he's working on writing a book. So Robert, it's wonderful to have you with us this month to talk about our topic. And with that, I'll hand things over to you.
Good afternoon, and thank you. Always a pleasure to be back with the Incorsa team. As Liz said, today we're here to talk about government contract accounting policies and procedures. Before we get into the meat of the topic, just a little bit about us at Left Brain Professionals. We are a boutique accounting firm. As Liz mentioned, we work only with government contractors. We do have clients coast to coast. We practice primarily accounting system design, implementation, and audit support. Some of the types of projects that we get involved with are helping clients through the SF 1408 survey or otherwise achieving an adequate or improved accounting system, indirect rates, bids and proposals, cost accounting standards, some of the recent webinars that we've done in this 12-part series. If you're just now joining us or you're missing some of those, again, go back into Incorsa or email Liz and she can get you pointed to the right spot. Next month, come back and join us. I believe it's on August 18th, and we're going to be talking about unallowable costs. With that, I'm actually live and on location today. If you've been with us, the background looks a little bit different. Out here at Melissa's today, we're doing a team strategy meeting for a couple of days. So Steve and Melissa are here, but you can't see them face to face at the moment. They've stepped out away while I'm working on the webinar. Our learning objectives for today, I always like to tell people if I do my job and do it well, at the end of the 90 minutes today, you should be able to describe the importance of policies and procedures. You should be able to list common policies and procedures that are reviewed by government contract auditors, compare the formal and informal documentation methodologies, and specify ways to maintain adequate policies and procedures. With that, we've got a polling question, really just here to kind of gauge where you are in your current setup. So with that, Liz, if you'll kick it off for us, please.
Perfect. The question is, which explains the current situation of your policies and procedures? So just a quick baseline here to get the current state as we dive into the topic. Looks like answers are coming in pretty quickly, so we'll leave this open for about 5 to 10 more seconds here, and then we'll keep rolling.
And if you peek around, Melissa's sticking her head in here to grab her computer while you're doing your polling question there.
Oh, fun. Well, say hello to Melissa. We actually, when I launch a poll, we can't
Oh,
see your video. But we're going to go ahead and close the poll down. I'll share the results real quick. So it looks like we have many people in the audience feel that they have sufficient policies and procedures. So it'll be great to hear your feedback as Robert goes through, and just as you have thoughts to say, oh, we are doing this, maybe we could be doing this. And we have about, just adding up the two middle ones here, about 30%. Where you're kind of like in that middle where we have some in theory or we could use some help. And then the remaining of you have none currently. And so you'll definitely get some great ideas today if you decide that it's time to start putting some in place. So thanks everyone for responding to the poll. It's really helpful.
all right. And I apologize, I'm on my Mac. It acts a little differently with GoToWebinar. There we go. All right, so our first learning objective is to describe the importance of policies and procedures. I'd like to start with this talking about audits. And if you've been through any kind of audit, what's one of the first things that the auditors ask for, right? So they send a data call up front, obviously usually asking, when we're talking about the accounting world, asking for financial statements, related information like that. But as a former compliance officer that's been responsible for exports and some other items, I can tell you that one of the common things across all types of audits that I've been involved with is auditors always ask for your policies and procedures, right? They want to know what it is that you're doing. When you take that and you align it with the three phases of an audit, as I like to describe it, the three phases of the audit are to say what you do. And that's having the written policies and procedures. To do what you say, actively use and follow those policies and procedures. And then number three, have evidence to prove it. And that's things like your records, receipts, reports, other transactional history that you can use. It's important to note that written, and really should probably bold that piece there, that written policies and procedures are the first step in any compliance program. And they're the foundation of any system as they guide users of a system in what they are to do and how to do it. And you'll kind of notice here, hopefully you picked up on this page, other than the reference to some receipts up there, that this is very generic. As I've said, across any kind of compliance program, any kind of audit that you go through, these are the basics, right? Say what you do what you say, have evidence to prove it, and it's really around the written policies and procedures. So what are three reasons that companies often fail audits? If we talk about what three phases of an audit are and having written policies and procedures, what are three reasons that we often see companies fail audits? One, they simply don't have written policies and procedures. They may have standard practices, and that's often what we encounter when we work with small businesses. There may be one person or maybe a couple of people who are performing the tasks, and as we observe and ask questions, we can deduce that they're fairly consistent in the practices and how they do stuff. It's just that they don't have written policies and procedures. And that's probably one of the number one things that comes up that auditors will say, if you don't have written policies and procedures, then how can you ensure that people are following those? If it's just verbal and common knowledge, that's really not good enough. Another reason are ineffective or poorly designed policies and procedures. So that means that while you may have policies and procedures, they really weren't designed to meet the spirit of the requirement. Even if in other words, as an auditor, when I look at them, I can read the policy and procedure and say, well, you've got something written here. When I think through what somebody would do, I can tell just by reading this that you would not be compliant with the requirement, whatever that requirement might be. And then the third reason is that, and this really is the big one, this probably should be number one, it's not so much sometimes the companies don't have policies and procedures, it's just that they simply don't follow them. Again, I can tell you from audit experience, one of the things that I have seen quite often, especially in the days when auditors are on site, again, up front, they ask for a copy of those written policies and procedures. They come on site for the audit, and then what's one of the things they do? They grab their pen, a blank pad of paper, and they come sit down in your cubicle or in your office with you, and they say, okay, you're the person in charge of running payroll. I understand that today's the day you run payroll. I'm going to observe you running payroll. And so they sit there with a blank piece of paper, right, and they just take notes. And you might say, well, why are they just observing with a blank piece of paper? If you don't realize how this process works, they've read the policies and procedures before they came in. Part of what they're taking notes on is to actually see what you do. One of their notes is going to be, did you get down the policies and procedures yourself and follow them, right? Because that's going to be an indicator if you know what you're doing, know where the information is. Then they're going to take those notes and go back to, you've usually, we tend to lock auditors in a conference room somewhere, right? So they're going to go back to their conference room, they're going to compare their notes to the written policies and procedures you have, and they're going to say, okay, did this person, when they processed payroll, did they do the steps that are outlined? And that right there is where auditors will usually come up and say there's a problem. It's not so much sometimes, again, that you have a lack of the written policies and procedures or that they're poorly designed. It's simply that you're not even following what you say that you're doing. While you may have an audit finding, to kind of said it another way, while you may have an audit finding for improper treatment of a cost, you're more likely to get into trouble for either not having the written policy and procedure that you consistently follow. And that consistency is a big piece. Liz, another polling question here for us, please.
Poll 2, the 3 phases of an audit include all of the following except. And I just love how memorable and simple this is. Say what you do what you say, and suppose I'm giving away the answer, and have evidence to prove it. So we'll leave this open. If anyone's really listening, we know they are, and we know that I just might have given a very good hint, but it's just so simple. It's so simple how oftentimes what's important in life is also important in business. And I like how you just simplify things so well. Now, let's see. Do we have any questions, Jenny, that the audience would like us to respond to?
No, let me look. Sorry, it's not big enough. It just looks like technical issues right now.
Okay, very good. So if anyone's having an issue with the poll question, I think that that's mostly been resolved with GoToWebinar, but if you are having any issue at all responding to the poll, go ahead and just let us know within that chat box, within the questions box. Let us know your response and we can track it there. So thank you everyone for responding to that. I love it. Thank you, Eric. So Eric says, it's very clear. I like the structure of the presentation. Awesome. Well, we're gonna go ahead and close this poll down. We'll share those results, and it looks like 76% of the audience got the question right. So good work, and we'll keep rolling.
All right, doesn't look like, oh, there it goes. Making sure my screen caught up with everybody here. There we go. All right, so our second learning objective today was to list common policies and procedures that are reviewed by government contract auditors. So I'm gonna highlight that tagline under there. These are the ones that we believe are the minimum to comply with the SF 1408. Now, larger, more complex organizations certainly will have more policies and procedures. We'll talk about that at the end of the presentation when we talk about formal versus an informal approach to policies and procedures. But the ones that we're going to go through in detail here today are the ones that are really key for getting through the SF 1408 survey. And that is the pre-award survey that you go through to obtain an otherwise adequate or approved accounting system. So your policies and procedures should have some basic company information, right? Describe the products and services that you offer, the type of legal entity that you are, if you're a C Corp or an S Corp, partnership, it could be a sole proprietor. Clearly define what your fiscal year is, even if it's a December 31st, and you think, well, people know that. It's just important to, again, identify what your fiscal year is. If you have a tax CPA or other consultants who assist in what their roles are, again, it's helpful for an auditor to know that you do have, especially in the government contract world. I think it's really nice. One of the advantages that we sell in selling our services is that You know, when our clients are interacting either with the government, with one of their clients, when they're interacting with auditors somewhere along the way. And in fact, it brings a level of confidence to the client. It brings a level of confidence to the outsider to say, hey, we work with left-brain professionals and they are the government contract accounting consultants and we rely on them for their specific guidance in these areas. You need to have a system description. We recommend having a diagram of some sort. Jenny put together a great diagram of what we typically do with many of our clients here. We use QuickBooks Online, T-Sheets, Bill.com, HubDoc, Expensify, and Paylocity. And the pictorial that she's put together here is that QuickBooks is at the center of all of it, right? That's our core accounting general ledger software. And now you see how we get data in from these other tools. You want to make sure that you include a list of all the software, the apps, and many of us are using lots and lots of apps, tools, worksheets. So for example, if you're calculating indirect rates outside the system, if you've got some other warranty accrual or some other, again, tool that you're using in some way that's feeding data back into your general ledger system, that really is part of your policies and procedures. It's good to list it out in here and identify what it is. Payroll, again, like most of us, I'd be curious to know what the percentages, but most of us outsource payroll right to somebody like an ADP or Paychex or Paylocity. You might say, well, that's somebody else's problem. Yeah, but it's still right. It feeds information into our GL. So we need to identify who they are and again, what their role is. You need to identify what your chart of accounts for the government contract world. And if you've been with us on some of the other presentations in this 12-part series, we talked about this, so it should be a bit of a reminder. But we have the basic structure 1 through 9, where we list out assets, liabilities, capital or equity, the revenue, direct or cost of goods sold, the intermediate, fringe or facilities pool, overhead, G&A, unallowable and other. And actually, it's really nice to include the full chart of accounts. One of the reasons for that is that it shows that you know what your full chart of accounts is, and you should have a specific policy and procedure around when and how GL accounts are added and who approves them, right? Because you want to make sure that you've got audit traceability on the addition or deletion of any accounts. Another polling question here. It seems like we've got a few early on, but they're always randomly inserted. Make sure you guys are staying on your feet. So Liz, if you'll pick that off, please.
Randomly, but just enough to align well with the materials. So the company description should include the following, except which of the following? And I am seeing just a couple folks who are having a hard time answering in the quick poll. So again, just go ahead and let me know if you can't answer. Just let me know in the questions box. Looks like we don't have any questions just yet, but we're keeping an eye, and just as a reminder, in addition to Robert answering questions when we pause for these poll question breaks, Jenny is also on and she's happy to answer questions and keep an eye out there as well. So don't hesitate to ask questions or share some ideas if you'd like to. Thanks everyone for responding. We'll close this down. How did everyone do?
All right, so the what is not well, actually this should have been a select as many as apply, right? Do we have it set up that way?
We had it as a select one, so that might have been a...
Oh, yeah, so I guess we got people confused. Sorry, this should have been a select all that apply. And we did talk about all of these, right? So a company, I believe, I may have gotten my, oh no, sorry, the one include, let me pause because I have now got myself confused. For the company description, yes, the description of products and services, the legal entity and fiscal year. The one that's not included in the company description is the diagrams and flow charts. That's in the system description. So
all right, good. So very good. So the correct answer then was diagrams and flowcharts. And so it looks like, even though there was a little bit of a you know, challenge there, majority of you got the question right, because we're specifically here talking about the company description, not the full-on policies and procedures.
Correct. All right. So, there we go. All right. And what we're going to, again, just a reminder here, what we're going through are the requirements of the SF-1408. So you're going to see a number in parentheses as we go through these slides. That number aligns with the number that's on the SF-1408. So if you download the handouts separately, go back, pull a copy of the SF-1408. You can Google that as in Sam Frank 1408. That will pull up the checklist. We previously went over that. You can also go back and look at the previous webinar presentation on it, but you'll see that those numbers align with those requirements. One of the requirements is that the books need to be maintained according to GAAP. Now, I also want to just insert a note here that we're providing some general terminology here. This is not meant for necessarily a copy and paste. We didn't do detailed policies and procedures here, but we're really talking through what the meat and the intent is and what the types of things that you should be including in your written policies and procedures. So what we've said here is that Acme Solutions maintains an accrual accounting system and follows GAAP in the U.S. and regularly consults with our tax CPA and government contract accounting firm for the proper treatment of all costs. Evidence of our compliance with GAAP can be found, and again, there could be different things that may apply to your company, but some of the principles of GAAP are that we have matching of revenue and expenses, we have a revenue recognition policy, and for example, the proper expense treatment of paid absences. So some very specific guidance in how we're supposed to be handling those. We need to have a monthly close. We need to define when and how that monthly close occurs. And here that satisfies 2G or 2 Gulf, again, of the SF-1408. And we're talking about the reconciliation of direct and indirect costs that are completed prior to the issuance of any client invoice. That's really going to be key in the government contract world, especially if you're doing cost type work and you have cost type invoices that you're submitting. You're going to want to reconcile and need to reconcile all of those direct and indirect costs before you can issue any client invoices. To ensure that all the direct costs have been assigned to the appropriate job and the job cost ledger, like that subledger ties to the general ledger. And then that the monthly close process includes the posting of all the revenue and invoices and the reconciliation of certain balance sheet accounts. We would recommend that if you're going to have something like this, that you would identify, you probably take your balance sheet accounts and you put them on some kind of rotation of when and how they are reconciled, so that within a year, all accounts are reconciled. You may have some accounts that are reconciled every month. You may have some that you reconcile quarterly or only annually. And again, it's helpful to list those out and what the reconciliation process is for those. We're going to talk now for a few slides about cost pools. Again, some of this should be somewhat familiar if you've been with us on the fundamentals and the advanced indirect rates. We talked a lot about cost pools. In our policies and procedures, we need to define each pool, the base, and the allocation method. We recommend including specific account numbers or ranges of accounts. When we talk about direct costs, these are costs, remember, that are directly attributable to an end cost objective, such as a contract, a job, or a project. Direct costs include labor, materials, travel, ODCs, and subcontractors. As an example here, we've said for Acme Solutions, we assign direct costs to jobs, which have a one-to-one relationship with a client contract, a PO, or a task delivery order. We capture all of our direct costs in the 5 series of accounts from $5,000 to $59.99. Again, very clear, so an auditor comes in, they understand what your direct costs are, where to find them in the trial balance, and how you treat them. Similarly, fringe. Fringe is an intermediate cost pool. It's important to identify that it's an intermediate cost pool and that you separate fringe from overhead. You can certainly include fringe in your overhead. There are companies that do that. There's nothing necessarily wrong with it. We recommend tracking fringe separately in its own pool so that you can really identify those costs separately from other overhead costs. But here we identify that fringe, again, as a reminder, is those costs that are maintaining our W-2 employees. It's important to identify that this is for W-2 labor. We identify the types of costs that are included in our fringe pool, such as employer taxes, health and life insurance, retirement, and paid absences. And then we say that we allocate our fringe over total W-2 labor, which happens to include direct overhead, G&A, and unallowable labor, and that our fringe costs again are captured in the 6X series of accounts from $6,000 to $6,499. Moving on to facilities. Facilities is another intermediate cost pool that's used to capture or collect the cost to acquire and maintain occupancy space. Some types of facility costs include labor, rent, depreciation, utilities, maintenance and repair, insurance, taxes, and telecommunications. Let me pause here for a moment. Again, what we're walking through here is, again, that description of the cost pool, the base, and the allocation method. So we're describing the types of costs that are being included. This is helpful for a couple of things. Again, the auditors come in, they want to know, oh, what cost pools do you have? Look, they're clearly identified. We've identified the types of costs that are in each cost pool. It's also helpful when you have staff, especially if you have new staff and you know, as you're training people, you train them to use the policies and procedures. If I'm one of your new employees and I'm coding a transaction and I go, I don't really know where this should go, I should be able to pull down the policies and procedures and go, okay, I know it's going to go to one of the cost pools. Let me go to the cost pool section and read. And let's say I've got an invoice in front of me for lawn maintenance, and I go, is that overhead or what is that? I could come here and when I read this and I see that, oh, this is occupancy costs. These other costs sound like for building. This specifically says maintenance and repair. I've got a bill here for lawn maintenance. Sounds like this invoice should go into facilities, okay? And again, we're identifying, again, how we're allocating this for our facilities. We're allocating it over square footage for each department, and that those costs are further applied or allocated into overhead and G&A. Again, we've identified that these are still part of the 6X series of accounts, but they go from $6,500 to $6,999. Another polling question for us, please, Liz.
All right, so this poll relates to direct costs. Direct costs, include which of the following? And here we have a please select one, but all of the above is an option to respond. And I want to go back to something that we received. We received a comment from one of our attendees today, and I think it's a neat question, but also insightful. So this attendee works within internal audit, and she says, where I work, we repeatedly find instances of either outdated policies and procedures or the non-existence of policies and procedures. We go ahead and we highlight the risks with this, but what else would you recommend that the internal auditors do to help in this situation?
So if you don't mind, I'm going to delay answering that because I'm going to address that near the end of the presentation. I've got some stuff specifically for that. So just keep that question in mind, and I believe you'll have the answer.
Perfect. I think that it's a great question too. I'm glad we'll address that. It just really highlights, the role of other members of the team in this case, internal audit. Well, thanks everyone for responding to our fourth poll. 91% of you said all of the above, so great job. We've talked about direct costs previously on some of the webinars, so I think that material definitely sticks and it's great to have some repetition.
All right, I'm waiting for, oh, there we go. It always takes a second for the Mac to catch up for some reason. All right, continuing on with cost pools, talking about overhead. So overhead costs, again, if you guys, and if you want to, another quick reminder, go back and listen to the webinars in the past that we did on the fundamentals and advanced indirect rates. We talk a little bit more about each of these cost pools. But here a reminder that overhead are those costs to support client work which cannot be easily assigned to a final cost objective. Remember that a direct cost is directly attributable to a final cost objective. Here, overhead costs support client work, but I can't assign it to a specific one, or it's a type of cost that supports all clients or projects as a whole. Some of the things included in here, we do have labor. We have applied fringe. You'll notice, and this will be another thing that you'll identify as we go throughout these pools, where I have labor, I note that I'm going to be applying fringe as part of that cost pool. I also have applied facilities, because remember in my scenario here, we have facilities as a separate intermediate pool, and we're going to be allocating those costs into our overhead and G&A. So I identify that. Again, other costs like equipment, depreciation, maintenance, repair, indirect travel, and again, I just clarifying that we have indirect travel separate from direct travel. We allocate those costs. Oh, we've got an error here, I apologize. This should be allocating those costs over direct labor. So Jenny will just need to make a note. We want to update this and get a correct copy out to everybody. This should be overhead allocated over direct costs over direct labor plus applied fringe. Quick reminder that when we're talking about overhead and direct labor, that also includes BMP and IRAD labor. Remember that BMP and IRAD labor are treated like direct labor. And so since direct labor is in the base of overhead, then our BMP and IRAD labor are also in the base of overhead. For G&A, those are the costs that we like to say are for running the business as a whole. We do have the labor, again, remember applied fringe and applied facilities. I think it's important to note those so that it's very clear, again, to your auditors, that they will expect to see that in your calculations. Another great note here for policies and procedures, you know, when it comes to if somebody wants to understand how your stuff is being calculated, and they're looking at, for example, maybe you've got an indirect rate calculator or worksheet of some sort, and they want to validate the information, they could have that indirect rate calculator here. They could have your policies and procedures here, and they could read through and say, yes, the stuff that you've got in the policies and procedures lines up with the way you've got it built into your indirect rate calculator. We also obviously have professional fees, licenses, and certain taxes. I note that it's certain taxes, our federal income taxes, are not part of G&A. Those are not includable in our rates back to the government. G&A, as a quick reminder, you do have the option of either total cost input, TCI approach, or value added. For the scenario here, I stuck with, with TCI. That's the most common that many contractors follow. Again, I've identified the base of my TCI includes my total direct costs, plus the applied fringe as appropriate, my overhead costs, and the unallowable portions of direct and overhead costs, okay? Quick reminder on the unallowable costs, and we've got another webinar coming up next month. We'll do a deeper dive. But when it comes to the proper calculation of rates, yes, unallowable costs are excluded from the pool portion, right? They're excluded from the top or the numerator, but they are included as appropriate in the base or the denominator for the proper calculation of rates. That's one of those areas that auditors know companies get it wrong. It's low-hanging fruit, and they're going to look for it, and they're going to find it with a number of contractors. Note here again that overhead is applied to BMP and IRAD costs. Overhead that is applied to BMP and IRAD costs are excluded from the base of G&A because BMP and IRAD are in the pool of G&A. And so when we have the applied overhead portion on BMP and IRAD in the pool, it cannot be in the base. That's one of your one of the basic fundamentals of these rates. If you have a cost, it cannot be in both the pool and the base. Okay. And G&A costs again are captured in the ADEX series of accounts from 8,000 to 89.99. We have our unallowable cost pool. It's those that are costs that are defined in FAR 31 or certain contracts as being specifically excluded from contract billing, and that includes direct and indirect. So we can have unallowable costs that could be direct or indirect in nature. Some of the common ones we've got listed for you here: alcohol, interest and finance charges, charitable contributions, related party occupancy costs. That's a big one that we're going to talk about in next month's presentation, and not at all related party occupancy costs. It's those in excess of the effective cost of ownership, certain labor transactions, and all directly associated costs. We'll talk about what it means to have a directly associated cost next month. Continuing on here, for Acme Solutions, again, just some sample language. We exclude all unallowable costs from the cost pools and include them in the basis as appropriate for the proper calculation of indirect rates. And we've noted that these are in the 9X series of account from 9,000 to 94.99. And typically the 9,500 to 99.99 we reserve for other income, other expenses, federal income taxes, other things that are, again, part of the books, transactions that we do need to capture, but are not part of our indirect rate structure for government contracts. Next piece here outside of, so the last several slides were around cost pools. You may remember again from the presentation that we had on obtaining an adequate accounting system that job costing is a big piece of that for government contracts. And in fact, there are two items, 2B Bravo and J Juliet. Job costs are direct costs that are incurred for a specific contract, job, or project. And the acquisition or use of the resources and supplies is clearly attributable to a specific final cost objective. Primary cost elements, we talked about these when we described direct costs earlier in our policies and procedures. Just a reminder that that's labor, material, travel, ODCs, and subcontractors. Job costs need to be identified at both the job and at the sub-job, task, CLIN level, different terminology. Some of that depends on the accounting software that you use. Some of the software out there, we know they call it a project at the top level, and then they have sub-projects and tasks, or maybe a job at the top level with tasks. Whatever the terminology is, typically what we recommend companies do is that you have a one-to-one relationship between a job or a project in your system and that contract or PO with your client, so that it's very easy to identify those. And then, when your government contract has CLINs, contract line item numbers, or SLINs, subcontract line item numbers, basically those lower level tasks, you should be able to place your contract and your job information and your project information in your system side by side and go down the list and say, okay, my contract says I've got 10 CLINs. My cost accounting system shows that I have 10 line items for people to charge their time and expenses. For Acme Solutions, and we wrote this in terms of QBO because that's what a number of our clients use. In QBO, we create customers, sub-customers, and projects. We identify that a customer matches our client as identified in the contract. We use sub-customers for each contract with a customer, right? So we may have multiple contracts with a customer. So if you looked in a QBO setup, you would see multiple sub-customers that align with those multiple contracts. And then under each sub-customer, we actually create a project. Again, this is QBO structure and terminology, but we create a project for each of those CLINs. And then QBO allows us to invoice at the appropriate sub-customer or the equivalent of the contract level for all projects or CLINs associated with that sub-customer. Again, here we've clearly defined so an auditor can understand what the structure is in our system. You want to use the terminology that is in your software. So because again, they're going to be getting reports out of your software, and if your software calls it a job, then you need to use the term job. If your software calls it a project, then you need to use the term project, right? Make sure that it aligns so it's very easy and clear for somebody from the outside to be able to make sense of it. Now the polling question for us, please, Liz.
All right, so we're up to poll 5. The 5th poll question is overhead costs support client work, which can be easily assigned to a single final cost objective. So we'll leave this open for just a bit. I'm checking in to see the question. Okay. You know, as you were talking about policies and procedures and everything that they need to include, and it sounds like there's very specific and prescriptive categories and subcategories to address. I have to kind of give just a maybe show my true colors here and say, when I was an auditor, one of my most favorite things to do was to perform walkthroughs and talk about processes with different members of the finance and accounting teams and document what those processes were for the audit documentation. So many of you, or a couple of you,
Yes.
rolling your eyes, but I loved doing that. So there's hopefully like, go ahead.
No, what I was going to say is, I mean, that's really helpful when you have, for example, let's say you have 3 AP clerks, right? You got 3 accounts payable clerks. It's interesting to interview all 3 of them and see, do you get the same response, right? So that gives you an indication of whether there's going to be consistency then in the transactional history that you look at.
Yeah, that's an excellent point. Just so I think it's fascinating. I think it's fun, and I think there's probably a good number of team members and people out there. So look for the people who love it, right, to help with this process. I guess is what I might say.
Sure.
I'm going to go ahead and close this. And Robert, can you tell us a little bit about the answer here for this 5th poll question?
Sure. So it says overhead costs support client work, which can be, there we go, which can be easily assigned to a single final cost objective. And the answer to that is false, because remember, what we said is that overhead costs, we cannot easily assign them to a single final cost objective. Overhead costs do support client work, but they do so, generally speaking. So one of the examples I like to give is, having a support line or a help desk where, that as a whole supports customers, right? It's supporting that client work, but, I can't necessarily assign the cost of having, somebody working the support desk to any specific customer because they're answering questions from a whole bunch of customers. So the answer here is false.
All right, thank you so much.
All right, continuing on now, we're going to spend a fair amount of time talking about timekeeping. And I apologize, I know some of you have been on multiple webinars with us, and we really appreciate that. We hope that, just a reminder that this is a 12-part series. The idea is that if you do all 12 parts from end to end, that you walk away with a really good understanding of the specific requirements for government contract accounting. But I do repeat some stuff from webinar to webinar. Timekeeping, it's not the timekeeping portion here, it's the labor. You guys have probably heard me say this before, labor is the #1 expense of almost every business out there. I can certainly say that's true for us, right? We're a service provider, so it makes sense that labor is our #1 expense. The same is true for many of you out there. Even for some of our manufacturing clients that we have, labor is still the #1 expense. So if the government is buying a product or service from you and labor is a big expense in there, what do you think they want to make sure you're getting right? Your labor, your timekeeping. So there's some very specific requirements around labor. And this is what I just said here, right? They want to make sure that you're getting it right because it is that #1 expense. So we note here that the timekeeping policy procedure is probably going to be the longest and most detailed portion of your policies and procedures. Some of the specific items that need to be included: daily completion of timesheets for government contractors, vitally important. We all struggle with this. Let me tell you, the struggle is real, folks. I get it. But you need to have daily completion of timesheets, and that's from the top down. You get some of the executives and say, well, I'm the owner of the company, I shouldn't have to do that. Nope. Everybody needs to complete timesheets every single day. This next one is big, corrections with an audit trail and notes. Okay, for those of you who are using timesheets through your payroll provider, and I'm not picking on anybody in particular, So it doesn't matter whether you're using ADP, Paychex, Paylocity, Gusto, I don't know, there are a bunch of payroll providers out there. Many or most of them offer some kind of timekeeping solution. For the average non-government contractor, it's sufficient, right? Employees can go in, they can enter the job they work, they can enter, whether they took PTO or holiday, whatever the case may be. But where most of them fall, and I have to say most, if somebody can prove me different, I'm happy to see it. They've updated, but all the ones that we've worked with so far, they lack the ability for a true audit trail and notes. And that audit trail needs to be, for example, if an employee submits a timesheet and it either gets rejected, or maybe in the following week, either them or somebody realizes there was an error in the timesheet. And you have the employee correct the timesheet, which is what you need to do. You need to go back to the source, have the employee correct the timesheet and move forward. There's some different ways to do that, but however you do it, there needs to be, the employee needs to initiate it, and there needs to be notes in the audit trail. And that's the piece of the puzzle that, again, most of the payroll providers we find with their platforms, they do not have that functionality built in, particularly around the notes. They may have a general audit trail, right? So they can see that somebody logged in and they can see time and date stamps and stuff. But let's say, for example, somebody charged 8 hours to contract day, and next week when they were filling out their timesheet, they glanced and they went, oh, man, I put that on the wrong time. I put that on the wrong job last week. I need to go fix that, okay? Many of them will allow you to go in, many of those platforms will allow you to go in and make that change, but there's no history of that change. And there's no place for the employee to make the note of why they made the change, okay? So if you're using one of those, I would challenge you to make sure that you can meet this very specific requirement. You need to record all time worked. A couple of phrases for this are either total time accounting or uncompensated overtime. It is what it sounds like. Record all time work. This is really key for your salaried employees. Your hourly employees usually isn't an issue, right? They get paid hourly. They want to record every hour they work because they want to get paid for it. And you want to get their overtime. But, your salary people oftentimes will say, well, I get paid for 40 hours. So if I work 45, I'm still going to pay for 40 hours. I just need to put 40 hours on my timesheet. No, they work 45 hours. They got to put 45 hours on their timesheet. We're going to talk a little bit about uncompensated overtime and proper calculations in a moment. The employee needs to certify their timesheet, meaning they're signing it. And you need to have a statement on there that says, I acknowledge, that these hours and jobs are correct, right? And the employee is signing it. The supervisor needs to review and approve it. We recommend for larger, more complex organizations that not only is the supervisor reviewing and approving it from the perspective that that's their employee and they know the employee worked and was on site or they took PTO or whatever the case may be, we also recommend having a project manager or program manager review it, right? Because you may have situations where an employee works across multiple programs in a week, right, which could be across multiple program managers, and maybe the supervisor, generally knows, yeah, I know they were doing some work here and there, right? They kind of know the employee was there and did stuff, but they may not know the actual work done on each project or how many hours were worked. And by having a project manager approve it, then there's comfort in the accuracy that's going into each project. You need to have a policy that addresses how timesheets are completed when an employee is unavailable. For government contract work, this can be TDY type of stuff. We have some clients who do international work. We have some clients who do some work in some highly secure facilities where sometimes employees don't have access to the outside internet and the ability to do stuff. We have employees who may travel across the world to do stuff, don't have easy access to doing timesheets. That's okay. You just need to have a policy, and it needs to be reasonable, right? You need to say, hey, when the employee comes back, we have that completed. You also need to take into account, what if an employee goes out on, unexpected sick leave or something like that, termination of employees. If you have an unexpected termination of an employee and they are unable to complete their last day's timesheet, you need to address how you're going to handle those kinds of items. You need to identify who assigns the work in the charge codes. That's going to be, if you ever go through a 4-check audit with DCAA, that's going to be one of the questions that they ask. When they're interviewing individual employees, they're going to say, who tells you to do the work and where do you get your job codes? And you need to provide annual training. We recommend, excuse me, we recommend that you include this annual training. And this can honestly be 15, 20 minutes. And it's just kind of reviewing the stuff that we talked about here, reminding your employees they got to do it daily. Reminding them of how you handle corrections and other stuff. 15 minutes might be enough, maybe 30 minutes. It doesn't have to be extensive. We recommend including this as part of your, shoot, I just forgot the term, but when you renew your health insurance, right, and you've got everybody in the room, open enrollment, that's the word I was looking for. When you have open enrollment, oftentimes we usually have like an all hands meeting, right? We get everybody either digitally or otherwise, right? We get everybody together. It's a great time to incorporate some of this annual training. We're gonna, when we send out the follow-up email, we're gonna give you a link. If you're not familiar, you can go to DCA's website. They have a publication out there called Information for Contractors. A lot of really helpful information. If you're not used to reading it, it's I don't know how many, it's maybe a couple hundred pages. I highly recommend you, honestly, if there's one thing I would tell you to read end to end on DCA's website, it would be that document. In particular, Enclosure 2 deals specifically with the accounting system and provides a lot of information on timekeeping and labor distribution, which is another topic here, the next one on our list. So you might say, wait a minute, Robert, you just spent a lot of time talking about labor and time. What in the world is labor distribution and how is it different from timekeeping? So what we find many times with clients is that they'll have excellent timekeeping systems. Many companies, right, they want to know, where are you spending your time? Especially if you have billable time, right? If you're like us as a service provider, it's really important that we have a good timekeeping system because that's how we make money. We sell time. However, what we find with many companies is that they have a single GL account. So if I go, and again, one of the ways I can quickly identify if a company has, an adequate accounting system is I look at the trial balance. And within a few minutes of looking at somebody's trial balance, I know what's going on. And if I see they only have one GL account for labor, they might call it labor or salaries and wages or payroll expense, whatever they call it, but they've got one GL account. So that means that they do not have a GL account separate for direct overhead, G&A, and unallowable labor. So I can tell you already right there, that's going to be a big finding as part of an audit. Labor distribution is taking timekeeping to the next level. So it's taking the hours worked and now assigning the proper dollar value to those hours and distributing those dollars throughout the GL, across the cost pools, and among all of the appropriate jobs. Total time accounting that I previously mentioned, or otherwise known as uncompensated overtime, is a concept that's really unique to the government. It basically states that companies must calculate and apply an adjusted hourly rate for salaried employees who work more than 40 hours a week. So really quick, easy example. Let's say you, and I realize this may not be in compliance with dollar values, but for simple dollars. Let's say you have an employee, salaried employee who makes $400 a week based on 40 hours, right? That's a $10 per hour wage. Let's say 1 week they work, and so 1 week they work 40 hours. So you take their timesheet, you figure out the jobs that they work, and you charge $10 per hour for each of the jobs that they work. Next week, they work 50 hours. You still only paid them $400. Now their new effective hourly rate for next week, or another week when they work 50 hours, is $8 now, right? So 8 times 50 is $400. So now I have to take their timesheet where they work 50 hours across all of those jobs and apply $8 per hour to the job work. And you have to do that each week across all of the jobs. And the reason for that is that the government doesn't want to pay more. You didn't pay more for that labor, right? You've got a salaried employee. It didn't cost you any more for the person to do the job. So the government doesn't want to pay any more for it either. This hourly rate is applied to all hours worked or claimed, including direct and indirect. Again, quite common for somebody, throughout the week that they have a mixture of direct and indirect work. You need to apply this to all employees for consistency purposes. It's just much easier. Now, arguably, if you had employees who were only G&A and they never charged anything else, arguably, you could say, well, it doesn't really make any difference. They're still always charging their time to G&A. What does it matter? We recommend having a consistent policy across the board so that when you build, whether you build it in your system or you're building this in some kind of an Excel tool, you put everybody's hours, everybody's salary in there, and you apply the process across the board. And the government will be happy to see that as well. Again, that you have consistency in what you're doing. Taking this labor distribution conversation further, I mentioned already that having more than a single GL account, you need at least one, and there are reasons why companies may have multiple in each of these areas, but you need at least one GL account each for direct labor, overhead labor, G&A labor, unallowable labor, and your paid absences that are part of fringe. And you might say, well, wait a minute, but remember, paid absences are still labor that you pay out, right? It shows up on the W-2 and something that we have to reconcile as part of the incurred cost proposal. So we want to make sure that we have the appropriate accounts. Again, this is an area where we've seen problem with some of our clients. They will oftentimes, they'll have that one salary and wage expense, and they dump all of the holiday, vacation, sick, everything into one account, okay? If you're doing that, then we don't have the proper details of the dollars necessary to properly calculate your indirect payments. Also, to this extent, we recommend that companies use jobs in your system across the board for both direct and indirect. So that means, you're probably already using jobs or projects, whatever your system calls them, for all of your direct work. We recommend creating an overhead job and a G&A job, as well as an unallowable job and a fringe job, so that it's very clear and easy. If you have a facilities pool, create a facilities job. That way, it's a common practice, again, across the board, very simple. We always have jobs for all of these transactions that we enter. The other thing that it does, it makes it easy to build certain reports and validations where you can look at things and say, for example, all of my fringe jobs should only have charges in account 6,000 to 64.99, right? Because that's the account range that we identified as having fringe. So if you build some kind of report or tool that analyzes that, and all of a sudden you see, hey, wait a minute, our fringe job has some charges in the 7 series and 8 series, that jumps out at you as being a problem, right? That somebody miscoded something and you need to go in and fix those items. Another polling question for us, please, Liz.
Sounds good. So this is our 6th poll. What is the #1 expense of most organizations? And if I can, I'll mention quickly that we have a couple webinars coming up later this month from a company who does timesheets and is approved to work with government contractors. So I think it's just from what I'm hearing from you, Robert, time is such an important element to get right when maintaining government contracts.
And who is that? Who's providing those webinars?
Timesheets.com.
Okay. I'm familiar with them. We haven't used them with any of our clients, but I am familiar with them.
Yeah, yep. I was talking with their founder a couple weeks ago, actually, when we had our last webinar, and I specifically asked if they were DCAA compliant, and he said that they were. So I thought that was really good news. And, I know there's a few different solutions out there, Robert, that you've mentioned, and that your company works with a few of them. So I think it's good to explore options, go through that full process, and then identify what works best. And I imagine you probably don't see customers change too frequently once there was something that they like.
Yeah, that's true. And yeah, so my general comment, and I've said this before, I think when we were Also, when we did the presentation on obtaining an adequate accounting system, one thing to keep in mind, and that this is nothing against timesheets.com, I just always like to clarify that these systems can be DCAA compliant. My guess is that they, like many of the others, they have built in some of the things that we talked about, like having the audit trail and the notes and stuff like that. But it really is back to having the appropriate policies and procedures in place and that you follow those. If you're not following the policies and procedures and you're not using the tool the way it's designed, it doesn't matter whether they say they can help you achieve DCAA compliance. If you're not doing it the right way, you're not going to be in compliance and you're going to get in trouble. That's nothing against them, but I say that regardless of any GovCon accounting software.
Right, the software is really good. As we hear about software is as good as the information you put in, which falls back
It's
to
a tool. Yeah,
exactly the policies and procedures. Before we go forward, we have a really interesting question from Lauren. And so what happens when there's uncompensated time? It sounds like Lauren's in California, so I'm not sure if it's specific to California, if there's different rules in California or in other states, but does the government ever pay for the fines and settlements resulting from recording uncompensated time? So she's also saying the employer loses lawsuits brought by exempt employees for payment of uncompensated overtime. So it sounds like there's maybe some complexities there related to uncompensated overtime. You maybe just want to comment briefly or generally on uncompensated overtime?
Yeah, so I guess I would love if Lauren would contact us. I'd like to have even just a quick conversation for my own edification. So I'm just going to ask maybe you contact us at support@leftbrainpro.com. We'll have that email address up later because I'd like to understand a little more. One of my comments is, as many of us know, the HR laws, many other laws in California are different and unique, and there are some things to jump through out there. I don't know if there's something specific there. I will tell you that I'm not aware of that issue in other states. So it's hard for me to give a better answer at the moment.
Okay, well, thanks for hearing that question. So we'll go ahead, we'll close the poll, we'll share the results. Very, very heavily skewed toward time, which is the correct answer. So thanks everyone for participating.
Yeah. All right, continuing on again through the sections of the SF 1408 here, dealing with pre-production costs. I think there's a lag from when you close out the poll and when it gets back to me. It's strange. Dealing with pre-production costs. The term pre-production does sound like manufacturing, but can apply to services as well. These are costs that are often incurred outside the period of performance. In a manufacturing environment, these may be, again, when we think about pre-production costs from a manufacturing perspective, these could be setup or configuration costs. Maybe you have to reconfigure test equipment, maybe reconfigure a manufacturing assembly line or something like that. Could also include things like long lead items. That was always a big issue for us in the past, is that we would be in the process of negotiating a contract either directly with the government or with the prime. We had some long lead items, right? There's a couple of key components that might take several weeks or even months. And so you got to get those on order early. You need to make sure that your contract addresses these kinds of things. So for example, we would oftentimes have a separate contract to address long lead items where the contract would only be for those items. You want to make sure, again, from this concept of any work outside the period of performance, we see this at the initial contract award. We also see it with modifications along the way, that you want to make sure that if you're in, again, conversations either with the government or the prime, you guys have been talking about a specific date, you want to make sure that actual date is reflected in the contract. Too many times what we've seen is that by the time the government or the prime gets around to actually executing the contract or the modification, it gets updated to like a more current date. And if you have incurred expenses through some verbal agreement outside that period of performance, if the contract does not reflect that date, then now you've got costs that you can't bill back, right? Because you've according to the contract, at least regardless of any verbal communications you've had, you've now incurred costs outside the period of performance and they can't be billed back to the government. I would tell you that as long as you're very clear with that, most people agree, hey, we got to get these things done. We know the period of performance isn't going to necessarily align with the dates that we're able to complete the negotiations and getting the contract awarded. Just make sure the final document reflects what you've agreed to. It's important to note that if you do have these direct costs that are incurred outside the period of performance, and that could be before or after the period of performance, they are not billable. They are still direct. If they were direct in nature, they remain direct. They just become not billable. And they cannot be lumped into overhead. One of the things I've heard, and I just cringe when this happens, I'll hear somebody say, oh, well, if we can't bill them, just dump them into overhead. It'll be okay. No, if they were direct in nature to begin with, they remain direct. They're simply not billable. You need to have a method to identify and prevent the charging of these types of costs. And what's nice with many of your newer softwares, again, especially those that are designed for government contractors, is that the job costing system will oftentimes allow you to enter a period of performance. We've seen some that will allow you to take the period of performance down to individual tasks so that you can specifically, your job period of performance might be here, and because of the nature of certain CLINs or tasks underneath, you can do sub period of performances so that you can be sure that you're aligning and that may also come into play because of modifications. You may have a modification that adds or removes a CLIN, that may modify a CLIN in some way. And you want to make sure, again, that the final, whatever is in the legal documents is what is lined up with your actual job costing. Monitoring costs. This is going to be an interesting conversation. I've got some slides here to walk you guys through. This is one that catches people all of the time. So specifically, we're talking about FAR 52-232-20, and it states, and so I copied this out of here and I want to explain this. It says the contractor shall notify, this is straight from the FAR, the contractor shall notify the contracting officer or your prime in writing whenever it has reason to believe, the key part here is the cost the contractor expects to incur under the contract in the next 60 days, so looking forward, when added to all the previous costs incurred, will exceed 75% of the costs specified in the schedule. This says that when you will exceed 75% in the next 60 days, doesn't mean notify them when you hit 75%. And that's where companies get in trouble, okay? Because if you wait until you actually hit 75%, here's the problem. Primes and governments don't respond overnight. You can't get modifications the next day or the next week. Oh, you might call them up and they might say, oh yeah, we can do that. That's not a problem. They might agree to it verbally, but actually getting the paperwork in place, and you got to have the paperwork in place in order to invoice, and so you don't spend money and end up going at risk. It can take weeks, months. We tell people to plan on average at least 60 days. And guess what? That's why they've got the 60-day clause in the FAR to give primes, to give the government enough time to process those modifications, assuming that they have more money and they're going to give you more money to do the work. If you wait until you actually hit the 75%, then likely, many times what happens is at the pace you're going in the next 60 days, by the time they catch up with the paperwork, you may have exceeded the full ceiling of your contract, and now you're running at risk in your potential of not getting reimbursed for those costs. I've got a couple of scenarios I'm going to walk you through here, but again, quick reminder, it's not when you hit 75%, it's that you need to be able to look forward and identify within the next 60 days, am I going to hit 75%? So a couple of scenarios here. At the bottom of each of these slides, and I've got 4 slides, at the bottom of each of these slides, I just did a 1-year period of performance, $100,000 contract. You see there's period costs, the total cumulative. I inserted that target of 75,000 equal to 75%, right, of my $100,000 contract here. And so what I'm showing you with a red arrow is that at approximately October 15th, and I guessed kind of where these rolled over the little gray line, that on approximately October 15th is when I exceed 75%. So I got to back up 60 days. And so on August 15th is when I need to be notifying my prime or my government, whoever my customer is. The point I'm trying to drive home here is that you need to have visibility into your cost or your burn rate. You need to have a good time phase schedule and know when these dollars and when these transactions are happening. If you don't have good visibility into that burn rate, then you don't know what's going to happen. What you're going to see as I go through these 4 examples is I put some variability month to month in the cost, right? That's quite common. Rarely do we have a contract where we incur the exact same amount of costs every month, right? It pretty much never happens. We oftentimes have some variability, and that's what these 4 slides show. So I'm not going to do a deep dive on the next 3, but again, showing here that in this particular case, same $100,000 contract, but now I'm crossing the 75% threshold on September 25th. It means I got to notify somebody on July 25th. My next example, I'm crossing that threshold on October 5th. I need to notify somebody on August 5th. And the last one, what I did is I front loaded it heavy. So if you look at the dollars, or even if you look at the blue bars that are on there, you see the blue bars are higher in the beginning of the contract, but lower in the end. What if the reverse is true? What if you had a bunch of low dollars up front, but then you're going to have a bunch of high dollar months in the future? Again, those kinds of scenarios can have significant impacts on when you cross that 75% threshold. And you just need to have a good way to be able to do that. And really that's through things like earned value, making sure that you have budgets for your projects, that you're tracking those budgets, and that you've got a time-phased plan for those projects. Our next learning objective was to compare formal and informal documentation methodologies. Formal is where you got a structured format. Think having something like, that they're numbered and indexed. I've worked in organizations where they were very, very intricate. We had individual documents for each individual policy. Each individual policy, had its own structure. They all each had to be individually reviewed and signed. They were very formal in the language, almost legalese to an extent on some of them. And what I found myself and many other users, we were caught up in form over substance. We were trying to figure out, did I have the proper indentations, because somebody on the other end was always like, oh, well, you've got the wrong index numbers, and this should have been a title or a subtitle, or these can't be bullets, they have to be sentences. I mean, we spent more time trying to figure it out, and guess what? It had no impact on what we were actually trying to do. That said, I do note that, these types of things, again, if you've got a large business, especially if you have an ISO or a CMMI certification, if you're publicly traded, maybe you're owned by a holding company or venture capital firm, that may have more strict requirements around this formal approach, and you may not get away from it. Conversely, this is the approach that we really recommend for all of our smaller clients. It can be informal. Your entire policy procedure manual can just be a single document. It could be one Word document. You don't have to have individual documents. You don't have to have, 1.1.2.3.A.B kind of stuff. It doesn't have to be that. It's certainly nice that, in Word, if you're not familiar, you can set up, headings and subheadings and certainly organize it, make it easy to follow, make it easy to read. But it doesn't have to be super formal. Use common language, use layman's terms. The focus here really is about the substance of the document, saying what you do. That's the key. It's not so much, auditor isn't going to come in and say, oh, these should have been bullets, or this should have been a title or subtitle, or these should have been separate documents. They don't really care whether it's a separate document or it's all in one big document. They just want to know, do you have something written down? Is it logical? Does it make sense? Does it align to the appropriate regulations? And do you follow it, right? Are you doing what you're supposed to do? It's relaxed, it's easier to write and maintain, And it's just a lot easier, again, to focus on that substance over the form. I think this is our last polling question, if I'm keeping count, Liz.
Yes, this is our 7th poll. Now we do have an 8th poll, but we're not going to handle that traditionally with the quick poll box, because for purposes of CPE credit, we have 7 polls loaded, and to earn credit, the audience will want to respond to at least 6 of those 7 polls. So we'll go ahead and watch those results come in. They're coming in pretty quickly. And I think it's really helpful, Robert, just to think about formal versus informal and what's really important in that documentation. It sounds like for small to like small mid-sized businesses, it doesn't have to be 10 different documents. It can be one document that's just very clear and well written that does a good job describing the business's policies and procedures. It makes it seem a little bit less overwhelming when you think about it that way.
And, you know, and another thing that we've even recommended for some larger companies that typically have some more formal or stringent requirements, we've been successful in convincing people we're going to have a single accounting policy document. So we let them, you know, we satisfied the people who wanted something a little more formal, but we said, okay, can we have at least one document? So that way, when we make a change, you know, because oftentimes what happens is you go in and you update policies and procedures, and what happens? You end up affecting other policies and procedures. Well, if you're in this environment where every policy procedure stands on its own, then when you update this one, you got to update that one, and you got to update another one, and you got to update another one, and you got to get all of those through. You know, somebody's got to review them and sign them, and then they got to get posted. It's just a bunch of hassle. Whereas if you have it all in one document, you make all the changes at once, you submit them, they're reviewed, they're signed, they're posted, and life is happening.
I'm going to go ahead and close the poll. I'm going to share the results. And as I'm reading the question, so formal documentation methodologies are, was this the question perhaps where multiple answers could have been, might have been selected?
So formal documentation methodologies are, well, the answer should be D, delta, in a structured format, right? Formal. Remember, informal, we said typically single document in common language, layman's terms, easier to focus on the substance over form. And when we were talking about formal, we said that's where it's typically a structured format. So D, delta is the correct answer.
Okay, awesome. And it looks like most of the audience got that right. So great job, everyone. Thank you.
All right, so we have one more quick section here. I think we're going to have plenty of time to get to some Q&A. Just a reminder, if you've got some other questions, I hope Lauren contacts me. That was an excellent question. I'd love to have a quick conversation with her to dive into that. But our last section here, specify ways to maintain adequate policies and procedures. And this should answer that first question that you asked me earlier on in the presentation. So somebody, I think, was from an internal audit perspective, said, how can we help you know, people in our organization with their policies and procedures? So one, schedule a formal annual review. Even if you are a small company, maybe the term formal here sounds kind of counterintuitive to what I said, but put it on the calendar every year. You know, pick out a quiet time, you know, like after tax season. April is a great time, right? So it's assuming you don't have something else crazy going on in your normal April, you know, everything's submitted to the CPAs, we filed all the taxes, everything's kind of quieted down. April might be a great time to say, you know, we're going to schedule a couple of days and we're going to sit down and go through all the policies and procedures. You know, and your internal people could help with that. Your internal audit people could help with that. Make sure that you schedule a formal review after a change in key personnel. So if you have a change in a CFO, accounting manager, controller, something like that. And why? Because oftentimes when we have that change in key personnel, somebody brings in something new that they want to change to make sure that the policies, the written policies and procedures, again, reflect what we're doing in our daily practices. Make sure that you update when you have any changes in software or apps, including if you take on a new function, right? So many times our software, we don't necessarily do a full upgrade of software, but we'll get patches and feature updates. Well, sometimes, right, we might say, and QBO is a perfect example. QBO didn't always have projects. So if you were doing things one way and you had written policies and procedures, and then QBO released projects a couple of years ago, I forget exactly when, and you said, hey, that looks like a really cool tool. We'd like to start using that. Well, guess what? You need to update your policies and procedures to reflect the fact that you're going to be using projects now within your QBO setup. Make sure that you provide and document annual training with all personnel. As part of that review process, have training with everybody. Review the stuff that's in there, particularly if you know that, hey, on average, hey, we're seeing that people are having problems with this, right? These are some of the common errors. Let's go back and review what our policies and procedures say that we're supposed to do. And always make sure that you document any kind of training that you provide. Lastly here, I think I want to talk about, kind of what are policies and procedures versus work instructions. We get this question about what are these things and what should be, in those more formal environments, what's a controlled document versus an uncontrolled document. Your policies are control documents. That's a high level approach that the company is taking to how they treat a cost. The procedure is what is our method to implement that treatment? Typically, again, policies and procedures in the more formal environments are those controlled documents. Either a work instruction or a desktop instruction, whatever you call them, that's the detailed instructions where you have screenshots and you say, go to the screen, select this field, do the drop down, use that radio button, hit the checkbox, those kinds of things where you're putting very detailed. Your policies and procedures typically should never reference any particular software, because again, you're not talking about how you're doing, the actual daily instruction part of it. Your policies and procedures, you're talking about how you treat the cost and how you implement that treatment. It's the work and desktop instructions where we have that opportunity to get into those lower level details and work with, if you're in that formal environment, work with the people who are controlling the documents and say, hey, we're going to have these work instructions or desktop instructions that are just for us. They're not controlled. They shouldn't be controlled. They have other stuff that have nothing to really do with the policy and procedure. They're simply telling us how to do it in the software that we're using. Liz, I think this is that additional polling question that you're going to have people answer through Q&A.
Yep, absolutely. So for this final question, I'm actually not going to launch it. It's just going to stay on the PowerPoint slides on your screen. And the question is, when maintaining adequate P&Ps, how often should they be reviewed? So for the audience, we'd love to just get your responses. If you can just type them into the questions box, we will look for them there. So thanks, everyone. Something annually, at least annually, quarterly, lots of annually, monthly,
so
quarterly.
So I'm gonna, I want to get you some Q&A. So I'm gonna advance here.
Okay.
D delta annually is the key answer.
All
Certainly
right.
there wouldn't be anything wrong with quarterly, but annually D is the answer that we're trying to get to. We've talked about a lot here today. Policies and procedures, I'll admit, even for me, can be daunting at times, especially again when we're in these formal environments, when we're larger, more complex organizations, and we have a lot of different things that we have to deal with. We do have some tools available. We have a more comprehensive policy and procedure manual that we sell. If you are interested in that, again, contact us. The contact information is there on the screen, support@leftbrainpro.com. You can find additional information on our website, including information about this presentation. We're on social media, including LinkedIn, Twitter, Facebook, Instagram, and we have our own YouTube channel where we have a number of videos out there. So you can check us out on YouTube. You just go to YouTube and search for Left Brain Pro. We'll pop up right there at the top, and you can see some additional training information available to you. We do have a number of events. Again, this is, and I think you might have to correct me, Liz. I guess is this 7 because we're in July. I think we try to do one per month. I think this is 7 in the 12-part series. And next month, again, we're going to be talking about, on August 18th, we are going to be talking about unallowable costs. So with that, I'll open up to some Q&A.
Great.
That's
The first
great.
question is, we no longer use numbers for our chart of accounts. Is this an issue?
Not necessarily. I know that, like, particularly in QuickBooks, there's no requirement for the software, I should say, doesn't have a requirement for you to use account numbers. There's nothing inherently wrong with it. You wouldn't necessarily fail an audit. My general recommendation would be that you still at least group them in the structure that we've provided. So as long as everything is clearly organized into, and primarily we're really concerned about the income statement. So as long as your direct, fringe, overhead, G&A stuff are organized and identified, you could do that. I do know that most other accounting software, once you get beyond QuickBooks, they force you to have an account number.
Great. Our next question. Are there templates for policies and procedure manuals? Examples specific to government contracting?
Yes, so we currently have a more comprehensive version that's available. We are building a light version right now so the comprehensive version covers all the stuff that we talked about today, as well as more. We're building a trimmed down version for some smaller companies that really are just trying to cover the stuff, that we talked about today. And again, if you'll contact us, I'll put the contact info back on the screen here. If you'll contact us at that support email, we'll be happy to work with you.
Okay, the next question, timekeeping wise with respect to labor distribution, from a policy standpoint, what is the advantage or disadvantage to adding bid and proposal, or IRAD, to general and administrative labor as opposed to booking it all to G&A?
So if you have a significant amount of either G&A or IRAD labor that does need to be separated for proper treatment, again, IRAD and BMP labor, I should say, all IRAD and BMP costs, inclusive of labor, materials, or other expenses, are treated as direct, meaning that they get overhead applied to them. So in the case of labor, when we're talking about here, if you simply included BMP and IRAD labor in a single G&A labor account, then you wouldn't have an easy way to separate that out and do the proper application of overhead to it. So that's why it does need to be separated out into its own GL account. And you could have a single GL account for both BMP and IRAD labor. If you had both, I would probably recommend that you do have two separate accounts, just for tracking purposes, because eventually somebody's going to ask questions and say, well, how much money are we spending on BMP versus IRAD?
Okay, our next question is a two-part question. If policy is in place but not documented, how can that be conveyed to auditors? Is that a major finding from an audit aspect?
It can be. So one of the things that I would recommend, and what I've seen done in the past, is if you know you're going to have a financial audit coming, and you know that they're going to be looking at that, have somebody come in and interview your people. It's an easy way. There are people, and there are plenty of audit and accounting firms who do this, that they will come in and interview your people who perform those tasks. They'll document and they'll help you write up policies and procedures. And again, it can be a formal in process. You could take all of that and put it into a single document. But it's nice to have an outsider who can observe and take the appropriate notes and know the kinds of questions to ask, so that they're covering the appropriate information in the written policy and procedure.
Great. And our last question, which you touched on towards the end of the presentation, if new to government contracting, how much do policies and procedures need to change? How quickly?
Well, I would tell you that if you are, if you know that particularly that the SF 1408 pre-award accounting system survey for a prospective contractor, that's the survey you're going to go through in order to get that adequate or approved accounting system. If that's on your immediate horizon, then you need to have the appropriate policies and procedures in place that at least deal with what we talked about today, because the auditors are going to look for that information. If you're just getting into government contracts, you could certainly take time and build it, you know, if you don't have that immediate survey or audit hanging out there, you know, but it certainly would make sense to start working on that process.
Great, that concludes all of our questions.
Wonderful. Well, perfect timing. Great to have a chance to do Q&A. If anyone had a question and you didn't have a chance to ask it today, feel free to email Left Brain Professionals support@leftbrainpro.com, and I know Robert and his team would be more than happy to answer your questions. Well, that brings us to a close for today. We hope you can join us next month on August 18th as we talk about unallowable costs. So the registration link is live. You can go ahead and register. We will also be sending that registration link out in the follow-up email. So we really appreciate Robert and Left Brain Professionals and also Jenny for being with us today. We look forward to having you back with us next month. Just a couple quick reminders, there will be a short survey. So when you close the GoToWebinar control panel, that survey will pop up. We'd love your feedback there. And then also if you responded to at least 6 of the 7 poll questions that launched on your screen, you'll be able to download your CPE certificate an hour after the conclusion of the event. And then as always, your recording of the webinar today, as well as the materials, will be uploaded to your Incorsa dashboard for future reference. So with that, we're going to say thanks again. We hope you can join us soon and have a wonderful rest of the day. Take care.